Hi and welcome back to another video. In this video we're going to be analysing Shopify. Ticker symbol is SHOP and it's traded on the New York Stock Exchange. It's been requested many times on the channel so far and on the Discord as well, so I thought best to make a video. And in this video what we're going to do is review the business model and try and get a better understanding of how it works. Second, analyse Shopify's financials and study its recent success. Then look at the potential for growth based off of what we know about the business and its total addressable market. And then lastly, come up with a target or fair price to buy Shopify by screening the stock through a forecast and valuation model. So firstly then, the business model. Put simply, Shopify is an e-commerce website builder that takes care of the web hosting, domain name purchases, and helps in quickly setting up an online store for its merchants. And this makes them more of a software as a service company rather than just an e-commerce platform. With Shopify's platform, there's a dual approach. They act as the platform that enables the users to create an online store in order to sell their goods online. And then Shopify also helps them connect with consumers by providing the business with the tools necessary to build an online business. And its suite of solutions are multilateral, as we will see. They provide a host of services that enable the creation and functioning of the e-commerce store. And the business was initially started to target small retail store owners by giving them the tools to scale their business online more effectively and efficiently. But as the business has developed, they've also won large enterprise customers who utilize Shopify as their e-commerce solution. These names include Gymshark, Jenny Craig, and Heinz. As said, they do this through a subscription-based model where customers pay monthly for Shopify's software infrastructure, and they have 4 levels for this. The first one being the basic, which the majority of merchants choose, then 2 higher levels for more established sellers. Then there is also Shopify Plus, which isn't mentioned on here, but that is for more large enterprise customers like the previously mentioned names that we saw earlier, and is tailored more to their needs than individual sellers or small stores. Again, this is through monthly payments, but they are signed onto multi-year contracts, which means highly sticky and recurring revenues for Shopify. And all of that revenue from the subscription income actually only makes up 900 million of the 2.9 billion of revenue that they did in 2020. Shopify actually split their revenue into subscription revenue, which is what we've just seen, and merchant solutions revenue. And those merchant solutions revenues consist of additional services that are offered on top of the core platform. So in addition and in excess of the monthly subscription that these merchants will pay. And all of these merchant solutions or additional solutions are designed to drive higher retention in their subscription business and build a competitive edge around the core Shopify business. For instance, with Shopify shipping, that allows the merchants of Shopify to select from a variety of shipping partners to buy and print outbound and return shipping labels and track orders directly within the Shopify platform. You've got Shopify Capital as well, where eligible merchants can secure financing and accelerate the growth of their business, providing access to simple, fast, and convenient working capital through Shopify. And then Shopify Point of Sale is a mobile application that lets merchants sell their products in a physical or retail setting. And then Shopify Payments, which is a fully integrated payment processing service that allows merchants to accept and process payment cards online. And although the merchants part of the business is a lower profit margin side of the business, it is a very strategic part of the business which helps sustain and grow the subscription-based revenues, which are the high margin part of the business. So therefore, Shopify is willing to sustain the higher cost of sales from the merchant solutions platform. And this is why when looking at Shopify, we need to analyze 2 key performance indicators, as they are a halfway house between a SaaS company and an e-commerce marketplace platform because of the 2 ways in which they generate revenues. And those 2 KPIs are monthly recurring revenue and GMV, which is gross merchandise volume on their platform. And of course, it's useful to look at them individually and see that they're both going up, which they are here. But what I feel is important to look at the quality of Shopify's platform and how effective it is. They need to be measured in conjunction with each other. And the reason why is we want to see that Shopify is effective in that it's not just driving revenue growth for itself, which we can obviously see here it is, but also driving efficiencies and driving more sales for the customers who are utilizing the platform. And I've got a table here just to demonstrate what I mean by this. So we've got monthly recurring revenues, which is here, nice growth, GMV, which is growing a lot here. So that's the total amount of sales on Shopify's platform. And what would maybe hint to us that Shopify's platform maybe isn't that effective would be if monthly recurring revenue, so the amount that's charged by Shopify to its merchants, was going up as a percentage of GMV. So the amount of sales that were generated in comparison to the amount they're charging monthly was lowering as time went on. That would tell us that they're not a very good platform. But the opposite is happening, as we can see. So GMV is actually expanding as a percentage of monthly recurring revenues, which tells us that the platform has been effective in growing the customers' businesses. So the transaction flow is increasing dramatically. And this could be because customers' businesses are growing, but it could also be that they're attracting those larger enterprise customers. But they benefit from that as well because, again, the majority of revenue is captured through the merchant solutions business, which is all the ancillary services which they provide. So this GMV number they're capitalizing on anyway, even though it's growing in relation to their core business, which is the monthly recurring revenues. And we can see here demonstrated that their sales as a percentage of GMV haven't been hurt much at all. They've stayed around that 2.5% mark. The only concern I would have is that we know the merchant solution side of the business is lower in profitability than the core monthly recurring revenue business. But it is a good sign in all of this and just tells us that they are an effective platform. And before we jump into what the future might look like for Shopify, I just want to appreciate their financials that they've achieved so far and why they've been so successful. We've seen in their products how they can be successful. They operate a very effective platform. But let's just look at that revenue growth that we've got here. So in the past 5 years since 2016, they've really gone from 300 million in revenues as of the end of 2016 all the way up to around 3 billion in revenues as of the most recent trailing 12 months. And this is a graph that shows us quarter over quarter consistent growth without fail. And a lot of this will be to do with the nature of the platform. Obviously, they've got recurring revenue streams, which are very sticky. And when you have high retention rates, really do lead to very good compounding results. But also what we see here is that they've actually become profitable as of the most recent year. So in 2020, the company managed a 10% net income margin and a 13% free cash flow margin. So the path to profitability is becoming more and more visible. Gross margins aren't bad at all in the 53% range. So it's not a very asset-heavy business, although this gross margin is weighed down by the merchant solutions business. The subscription business will make up the majority of this profit because it is highly profitable. Now, the company's also got a very good balance sheet, although it has obviously driven a lot of that cash through diluting shareholders, current shareholders. 6.5 billion managed to land on the balance sheet in cash, which is very good to see. Only 900 million in debt for a company that's valued at 139 billion. That's not a concern at all. Shareholder equity managing to grow at a very nice rate as well. What I will point out is this average revenue growth over the past 5 years has been 71%, which is just astounding and is somewhat reflected in the price for the stock today, which you can see. So market cap of 140 billion. If we put a theoretical 15% margin on this business, or actually let's go even better and just say 20%, so it becomes a high margin business. We have a theoretical 20% margin on Shopify. That means that they're selling at a price to EBIT of 237 times at the moment, which is somewhat of an astronomical valuation. Also a 46 times EV to sales. So this is a premium price stock, but we're going to jump into how likely it is to grow over the next 5 and maybe 10 years and see if this valuation is justified. And a lot of what's going to drive our estimates into the future is the total addressable market itself, as always. So what I want to look at, first of all, is retail e-commerce sales worldwide. What is that number? So we can see at the moment it's 4.9 trillion. And what I want to do is take Shopify's GMV number, which is currently 120 billion, and look at what percentage of Shopify's GMV on their platforms makes up the total of global e-commerce sales, or in relativity, what is it? And that number, if we take 120 billion into the 4.9 trillion that the world did in 2021, they currently sit at around 2.4%, maybe more, of that value. And the reason why we'll look at it this way is because we saw previously in the video how much of Shopify's GMV they can generate as revenue. Over the past 5-6 years, it's sat around 2.5%. And based off of that number and the growth of this sales number, or total addressable market, we can make a reasonable assumption on how quickly they'll be able to grow revenues over the next, say, 5 to 10 years. Now, we're only going to use this as a base point and we'll probably make some assumptions off of it. But we can see Grand View Research here is telling us that e-commerce is set to grow at almost 15% up until 2027. I've seen various reports between 15 and 18% for the next sort of 5 to 10 years for the e-commerce industry. If we get a little bit more specific to what Shopify actually provides, which is website and software solutions for mainly individual sellers to create a platform. And what's popular at the moment is drop shipping, and drop shipping is heavily used on Shopify's e-commerce platform. So if we get a bit more specific to what Shopify does, we've got Grand View here saying that that market is set to grow at around 28.8% up until 2025. So a much higher growth rate than just the standard 15%. Personally, I feel like Shopify can grow a lot quicker than this into the future. Now, they will use this as a base, and this is just the tailwinds they'll have behind them, this 28.8%. But remember, they're going to be stealing a lot of market share, or we're anticipating that they're going to be stealing a lot of market share from some of the legacy providers in that industry. So I'm going to account for that in my forecast. And just to make it a little bit easier for us, they have given us some guidance, at least into 2021, and what they expect for revenue growth and things like that. Unfortunately, what they do say is that they've had a fantastic year in 2020. They do expect growth to continue, but maybe not at the rate in which it did the year previously, but above the rate in which it did before 2020, if that makes sense. Okay, and where this gets us in our valuation, and the core of it is going to be this GMV number at the top here. A lot of what's down here stems from that number, but I'll just talk you through it quickly. I've taken the guidance that they've given us that revenue growth is not going to be as high as it was in 2020, but higher than the years prior on board, and I've gone with about 70% in 2021, which is some strong revenue growth. But the feel I get from the management team is that growth is going to be significant into the future, but maybe not as high as what we've seen in the past 2 years. And that's fair enough. So I have trailed revenue growth down and GMV growth down a little bit going into 2025, but still at a very high amount. So 50% and then 30% for the remaining 2 years. And just as a little bit of a reality check, if you don't think this GMV and revenue growth is high enough for Shopify, well, this is 772 billion of gross merchandise volume on Shopify's platform as of 2025. Alibaba in 2020 hadn't even reached $1 trillion. So Shopify would be around 77% of that number. So you're saying that Shopify in 2025 is going to be as big as Alibaba was in 2020. Now, I think personally that's a very bullish estimate. I wouldn't go any higher than this 770 billion GMV number on the basis that Alibaba is a lot bigger and serves a much larger market. But I can appreciate that Shopify is set for some big growth into the future. If we go by our estimate that they can generate around 2.5% of GMV as revenue, then that means that their revenue will hit around 19 billion in 2025 from 2.9 billion today. And that's around a 6.5x in just 5 years. Net income margin I've got growing to 20. And it's interesting, the reason why I've put this up as high as 20% relative to where it is now is because they did release in their report what their margins look like if you take out some of the non-operating expenses. So they show this as non-GAAP net income. And they're early stage expenses like stock-based compensation, which is making up the majority of it. And without all of those non-operating expenses, they reach a 17% net income margin, which is quite strong. And I think, they'll be able to scale that up to 20% by 2025. Free cash flow has always been a bit higher than net income, so I've kept that trend going and I've got them only slightly higher, but at a 21% margin in 2025. So nearly 4 billion of free cash flow as of the end of the period, which is a very good number. For my terminal values, if I skipped right to them, I've got my first one, which is a EV to sales number. I've gone with 12.5 times because usually you see a SaaS company or e-commerce company anywhere between sort of 7 to 15. But where Shopify do have that high profitability potential and they are more of a software company than anything, I've gone with quite a high 12.5%. And then a 35 times earnings metric, which is a PE metric, just to anchor that number down slightly. And that's around 132 billion as of 2025. We average the two out, we get an enterprise value of 184 billion, less the debt plus the cash, and we get a market cap of 191 billion in 2025. Now, unfortunately, that means that that's not much growth from the price today. As you can see, it's already $140 billion market cap. And that means the stock would be around 40% overvalued today. And the intrinsic value for the stock, or fair price to buy the stock, would be $89 billion if you're buying the whole company, or $691 per share. Now, that's not what people want to see, I know, especially if you're interested in Shopify. So I have done a 10-year valuation as well, which does make it look a lot more attractive. And the reason why I think this is fair is because the market which Shopify are in has long sustained secular growth trends. So evaluating it up until 2025 might not give us the full picture. So I've expanded the growth rate to go into 2030. And past what we've seen already, all I've done is grow the business at 25% going into 2030 past that. And if you believe in these estimates, that means that they'll have revenue at $60 billion in 2030, which is a very big number. But actually, you look at it and you think it is doable for a company like Shopify and the presence that they have and the platform that they have. I've also expanded margins slightly to go up to 25%. And this isn't just a push to the upside from me. They really could do this if they do start to attract a lot more of those larger enterprise customers, which are a lot more profitable for Shopify than the smaller businesses. And this would get them to around 15 billion of free cash flow on an annual basis in 2030. And for my terminal value numbers, I've reduced the EV to sales number to around 7.5, which is a lot more reasonable, especially for a company that's as big as 60 billion in revenues. And then a PE of 30 times, so I've reduced that down to 35 times. Now, there is still risk here because who knows where the market will be in 30 years, whether we'll still have the same sort of valuations today. We probably won't, but I'm going to stick with a 30 PE anyway because we've gone with a 25% growth rate as of the end of the period, and this would mean a PEG ratio of around 1.2, which is a fair price to sell a stock, fair price to buy a stock. Average the two out, you get a market cap of 455 billion for the company in 2030, which is a very big company, but you have got to remember that this is in 2030. You know, the world could look very different in 2030. However, if we look at the DCF now, based off of this and these estimates and a required rate of return of 15%, it gives us an intrinsic value for the stock today at 120 billion for the whole company, or a share price of $983 per share, which does mean it's still overvalued, but this time by 13%. And look, this is only if you believe the forecast up here or the estimates up here can actually play out. And to summarize it, that's a 35 or 36% compound annual growth rate for 10 years, an operating margin of 25%, free cash flow margin around the same as well. And then these terminal value multiples, which could be seen as optimistic by some. Unfortunately, if I summarize it, I'd probably say that Shopify has got a little bit frothy. Although it's a very good company, got a very good outlook for the next 5 to 10 years, I probably wouldn't be buying at this price. If I was going to put a price target on Shopify stock, it would probably be this 5-year one, just because I have a bit more certainty and justification around these numbers that I've presented here. So my target price for Shopify is going to be $690 per share. Whether we will actually get to that price again remains unknown. The last time it was around my target price was back in April 2020. So a year on from now, we've seen a massive spike in the stock price. The stock's almost doubled. Whether I'll ever be able to actually get my hands on this stock, who knows? But it is a great company. If you do already own the company, don't sell just because I've presented this valuation to you. Hopefully you got in at a reasonable price. Hopefully you've already made some good gains if you did get in at a reasonable price because of the stock price surge. But like a lot of the companies that I value and seem overvalued based off of my estimates, I could always be wrong, and there is the potential for them to outperform. But that's about it for this video, guys. This spreadsheet, as always, is going to be available on the Patreon for you to check out, plug in your own assumptions, and see what your fair price would be for Shopify to buy today. I'll also be updating the watch list that we have, where we track all of the companies that we've covered and look at how close they are to our buy prices or fair prices. So if you're interested in that and supporting the channel, go and check that out on the Patreon page. And additionally to that, if you like the video, leave a thumbs up, really helps out the video. Subscribe to the channel if you haven't already, and I will see you in the next video. Good luck with all of your investments.